Okay. Hello, everyone, and welcome to our webinar. My name is Zuli Marabona. I'm Senior Vice President and Partner with KW Property Management. Thank you again for joining us. We are here today to discuss pre-budget insights, reflecting on achievements, and charting a path forward. As we know, we are moving into budget season, and what an important topic it is this year. Before we dive into the session, I want to cover a few housekeeping items to help everyone throughout the session. The session will last approximately an hour. We will have a Q&A chat open for everyone, so as the session goes on, please do not hesitate to ask away. And please feel free to submit your questions at any time. Also, and just for clarity, please note that this session and any other webinar that we host is for informational purposes only. Please do not take any advice, whether it's legal or operations related, as legal advice or as official advice, because we are not speaking specifically about your associations. So again, please welcome, and I'll turn it over to my co-host, Alex.
Good afternoon, everybody. So Alex Martin, partner over at KWPMC. And today we got two very special people here. I get all these emails and text messages all the time. When is Roxanne and Donna going to be back? When is Roxanne and Donna going back? So we decided to bring both back at the same time.
Back by popular demand.
Back by popular demand, that's for sure. So I'm going to give Roxanne and Donna some time to just introduce herself. Roxanne, go ahead and introduce yourself quickly here.
Thank you, Alex. Roxana Dorigo with KW Property Management. I'm an Executive VP of Finance. Been here with our company for 17 years. And it's a very exciting time in our industry and our company. I think there's a lot of great things happening to protect our associations more so than ever. And I've been doing this is my 17th year in budget season, so I really appreciate it. Maybe a few people that you meet in your life, but I really appreciate budget season. And I'll turn it over to you, Donna.
Thanks, Roxana. I've never seen anyone so excited about budgets. This is very impressive. So I'm Donna. I'm going to use my full name, Donna DiMaggio Berger. I never know if a relative's going to be tuning in. So I'm an equity shareholder here with the law firm of Becker and Polyakoff, vice chair of the Community Association Practice Group, board certified in condominium and planned development. And I'm very excited to be here today discussing this topic.
Thanks, Donna. It's a pleasure to have you here. Donna, I'm going to start with you today. Talk about the changes that are happening in CERS.
Oh, okay. So House Bill 913, which became effective July 1st, there's a lot of changes to CERS and budgets, which I know is the topic for today's webinar. That bill became effective July 1st. So it's a good thing everybody's tuning in today. There's a lot of small changes, Alex, and then there's 2 or 3 very significant changes. Let me just sort of tick off the smaller changes. Associations existing on or before July 1st, 2022, they now have till the end of this year to conduct their CERS and complete it. If you recall, the prior deadline was the end of 2024. So those associations existing 2022, they have until the end of this year to get their CERS done. There was also an increase in that little catch-all of for reserve funding. If a component had the deferred maintenance or replacement cost exceeding $10,000, that has now been increased to $25,000. Those are some of the smaller changes. There's also now a conflict of interest provision. This was born out of the fact that the legislature was hearing complaints that people conducting the CERS studies may have then been doing the work. Okay, and they may not have been disclosing that conflict, that potential conflict. So that was something that was addressed in HB 913. One of the huge changes is the ability to use alternative funding sources for reserve funding. So if you recall, prior to HB 913, there was only one association in the entire state that could use a line of credit to fund their reserves. I think it was an association with 25 sub-associations. That does not apply to our clients. So we all went to the legislature and said, hey, these other associations, they really need alternate sources of funding because the budgets are doing what? I know you guys are, Roxana, you're going to talk about this. The budgets are escalating, right?
Yes, double-digit increases for
Well, there you
more
go.
than 1 year. Mhm.
So 913 now provides what we hope is going to be some relief that an association can use a line of credit to fund reserves and can pass a special assessment. Now, these do require membership approval. If you do use alternate funding sources that were not contemplated when your SERS was undertaken, you will need to update the SERS. And by the way, SERS, Structural Integrity Reserve Study, for anyone who's listening and is like, what's SERS? The other huge change is the pause in funding. So as we know, once you get that reserve study, your budget, your operating budget, and the reserve schedule attached to that budget must be based on your most recent SERS. But again, the legislature was hearing from people living in all these communities who are suffering with the budget increases saying, we can't afford our assessments to fund reserves while at the same time funding the repair and maintenance projects. So the legislature heard and they put language in House Bill 913, which says you can temporarily pause. Again, this is with membership, majority membership approval, funding of your SERS for up to 2 years. It cannot exceed that. You need membership approval to do it. And it has to be based on the fact that you're using those resources that would have gone towards funding the reserves towards the actual project. And I want to be clear on that because I've had a couple clients go, okay, so it's automatically paused. We got our milestone done and now it's automatically paused. Well, no, if your milestone doesn't show that you need any work right now, you still have to keep funding your SERS. It's only if your milestone inspection has revealed that there is work to be done, whether maintenance or repairs, that you can then redirect the funds that would have gone into SERS towards those projects.
That's a really important piece, and I'm sorry to jump in. I know, Roxana, you're going to have a lot more to say on that, but we may want to cover that again because I think that there is a lot of questions and confusion around that piece alone, Donna and Roxana.
Yes.
Yeah.
Yes, I hear you clarify what has happened as of July 1st. The key was the confusion. We got approached with a lot of clients, I'm sure many more that you dealt with, but it's the financing. There was a big question mark about the financing and whether or not a special assessment could be used in funding that extra amount potentially from the SERS. And then the confusion of when do they start? When do we get that SERS? And then also the hardship, like you're talking about, and what the statute has listened to, which is we're doing a milestone. Now we have a multi-million-dollar repair phase. And what are we going to do now with the SERS? Couple that together, it's too much for our owners. So I think they've done the right thing. It's something that I think even from the beginning, right, of the law, there was a lot of confusion. And I think this time around with the clarification, it really makes an impact. I think prior clarifications were good. I think to clarify a few things, but this is a real large and impactful clarification for all association, all condos.
Well, you know, Roxana, to your point, legislation typically is incremental, right? They never get it right the first time, but you know, I had a mentor years ago tell me, you're never going to pass it. You know, you're not going to get the whole apple eaten in one bite by bite, and then it gets taken care of. But let me just touch on a few things you said. Special assessment. What's interesting now is you need majority membership approval to pass the special assessment to fund the reserves. We don't know how that's going to impact associations that have the ability to pass, boards who have the ability to pass special assessments without membership approval. Okay. So do they go according to their documents, or do they now have to get the majority membership approval, even though, let's say historically, the board alone could pass that kind of special assessment? That's an interesting question. I would say follow up with your counsel on that. One point I didn't mention, Roxana, was if you do, as a community, decide not to put a pause on the reserve funding, you need to update your SERS before you hit the resume button on that funding. So that's important to know as well. I'm going to give a little tip. I know we're giving tips out throughout this webinar. When you get that engagement proposal from your reserve company, make sure your attorney reviews it and make sure they put in there that that engagement covers these updates. Because if there's one through line in this entire bill, when it comes to SERS, it's that study is not concrete. You just don't get one and then look away for a couple years. That study has to be consistently returned to, updated, and used. So I would recommend to all our people listening, make sure when you sign that engagement proposal, that engagement proposal contemplates frequent updates to the
Yeah.
study.
That is great advice. It's something that we have given some of our clients, because you're right. This is a living, breathing document. And if you read just a few pages into the reserve study, there's full of assumptions that change the next day potentially. I always point to all the cranes in downtown Miami. If you see cranes in downtown Miami, costs are going up potentially, right? Related to our buildings. So build in, to your point, some updates, because the statute hasn't really addressed like how often do you have SERS, but you definitely should update the SERS every year, even if it's just for replacement costs, inflation, matters of the market that your condominium is in. So that's a great advice to negotiate that up front, basically.
Yeah,
right.
I mean, the statute, Roxana, does have several instances where they require that updating. For instance, when you're going to resume if you've temporarily paused funding, and also if you've now used an alternate funding source like a line of credit or special assessment, and that wasn't contemplated when the SERS was produced. Now you need to go back. But also to your point, Roxana, if you've done that roofing project or that concrete restoration project, now you need to go back. You need to update. So.
Yeah.
Oh, I would mention one more thing. An issue has come up. Remember, there were only 2 counties out of 67 Florida counties that had a recertification program for older buildings. That was Miami-Dade and Broward. The question is, does this temporary pause in SERS funding apply if the repairs are dictated by a certification? I believe the answer is yes, but again, as we said at the outset, I don't represent you personally, although I may have some clients online. Still, contact me, contact your association attorney, get an opinion.
Question, and thank you for that, Donna and Roxana. First and foremost, thank you for everyone that's jumping on and sending questions. We'd love to see that. I have a question here that may be relatively simple to answer. I think we covered part of that earlier. And the question is, can you please clarify if we completed our SERS in 2024 and are interested in getting a line of credit to fund reserves for 2026, should we or do we need to update our SERS?
Yeah, I believe the answer to that is you do need to update your reserves because you need to know how much funding you need. And especially this would be true if they've conducted any sort of maintenance or repair project since 2024.
Okay, great.
I think you're going to need your reserve specialist on speed dial.
Yeah.
Yes.
Yeah, he should be.
That should be part of the built-in pricing. All right, Alex?
A lot of people, I'm looking at the questions here, want a clear explanation of why this was paused. They want to understand it better why. So I'm reading a lot of the questions that are coming in.
Good question.
They're like, can you explain it in a way where they understand why the pausing for 2 years? What's the reason? They want a clear explanation.
I think it's a great question, and I think it's important to point out this pause is not automatic. So the board has to make the decision, do we want to even pause? I have a lot of clients that are undertaking projects and not pausing. They're saying, we're going to keep building up reserves and building up reserves, okay? And they're entitled to do that. So this is a question of choice. So why did the legislature offer this option? Because they heard, Alex, from a lot of struggling homeowners saying, we're paying increased assessments, as I'm sure Roxana can talk about, and we're paying increased assessments to fund the reserves, the SERS, while at the same time, we are getting specially assessed to pay for repair and maintenance projects. So the thought process at the legislative level was, let's allow associations who are required as a result of their milestone inspection and the recertifications to undertake this work, to just stop one source, which is the SERS funding, and marshal those resources to pay for the projects. Does that make sense?
Mhm. Yes, it
The
does.
minute that I read that update, I said, okay, they're listening to the hardship of owners. And let's not forget that reserves, although it's a big reason, top three, probably number one, as to why there were increases in hardships at some of associations, there were two others, insurance and labor considerations. So all coupled, we called it the perfect storm. So we had all these major top expenses for all associations being affected all at once. So it's been a lot for our associations, double-digit increases, where before we would see the nominal 3 to 5%, depending on inflation and negotiations with contracts. We saw 10 to even 30% increases, in some of our associations.
I would suggest that if there is a significant percentage of people in your community who are struggling with the increased assessments, with the ongoing maintenance and repair projects, now may not be the ideal time to undertake a discretionary aesthetic project, okay? And that's actually, I don't know, Alex, if you want to segue into the budget section of this bill, but that is one area where I think boards may want to be a little more cognizant of timing. And I think the legislature in HB 913 has forced them to be more cognizant of timing with this new requirement for a substitute budget. So I don't know if you want to get into that right now.
I think we should. Roxana, I know we started our mid-year financial reviews in June to get ahead of this. Can you talk a little bit about that?
Yeah, so what we do is we start early, very early. Really, a budget is something that you do continuously. First day of the year, you're already looking towards, are you meeting budget? And you should continuously look at those variances between your actuals to your budget. But we take a hard look now after 6 months of activity at an association to really understand the financial condition and the outlook to the end of the year. And if you haven't started budgeting, it is the time to do that. That's our biggest recommendation, is start early. And July sounds like very early, but it's actually not, because of everything that we're talking about. You need those professionals, you need your attorney, you need your engineer and or reserve specialist on call. And start asking, your management company, your accountants, what is your financial condition? So that's what we're starting to do here at KW.
Alex, I have a few questions before we move forward, and I'm going to try to combine two questions, kind of a two-part question. Associations are having trouble maybe hearing back from their engineers or the reserve study specialists. So the question, it's a two-part question. One, can they update these studies or these SERS reports themselves? Or two, what can or should they be asking the management company to do to help?
Yeah.
If they're not hearing back.
So Zuli, they cannot jump back into this. Those were old days, right?
Right.
Where the treasurer was filling out the reserve schedule and trying to figure this out, maybe having a roofing consultant come out. The law is very clear. If your reserve specialist has started a study and has not completed it, worst case scenario, I suppose you're going to have to engage another company. And we have seen some communities engage other companies as for peer review also on reserve studies. I will say, with regard to peer review, it should be a peer review because you think the first study was not robust enough, not the reverse, that the first study was great and now you're looking for it to be a little less thorough. So
Right.
In that regard, no. This is not, no longer is there an ability for a volunteer board to create a SERS. SERS is created by engineers, architects, or reserve specialists. What was the second part of that question, Zuli?
If they're not hearing from the either engineering company or reserve specialists, what can they or what can their management company do to help, or what can they be asking their management companies?
Yeah, I think it is find another company. I mean, I hate to say file a complaint, but all professional advisors, we're licensed. You know, we all have professional codes of conduct, reserve specialists included. You may want to say, look, you know, we paid for this, we need this, we have statutory deadlines to produce these things, and we're reliant upon you to do so. I mean, filing a complaint against a professional license, I suppose, is also you know, an option. Would be worst case scenario. But Alex, if I could build on the budget issue, because Roxana's so correct, this is the time. The sea change this year is going to be that some boards are going to have to produce two budgets. The budget they'd like to see pass, and then what's called under the statute a substitute budget. Okay, this is a huge change. So in the past, if the board's proposed budget exceeded 115% of the prior year's assessments, then the owners could petition, call a meeting, and substitute a budget. In all my years of doing this, I only saw that happen 3 times, and each of those times the substitute budget was not adequate to meet the association's operating needs. Now, it's not that the owners have to take the onus of substituting a budget. The board must look and go, okay, we've exceeded 115%. Now we have to create a substitute budget. And that substitute budget goes first to the members, and the members vote on that. And if they can't agree, then the board's proposed budget goes into effect. Now, for the 115% calculation, we're excluding reserves, we're excluding insurance costs. So if you are still exceeding 115%, you have to look and see if you've got discretionary spending in there. The legislature did not define what constitutes discretionary spending, but the example I like to give to clients is this. If you are undertaking a major maintenance or repair project, and you decide that you're going to change the paint color in the hallways, and you're going to change from carpeting to tile, and now you're going to redo the lobby, that's discretionary. The repair and maintenance projects are not discretionary. But so what's excluded? Any maintenance and repairs that are driven by the milestone, reserves, and insurance. But discretionary spending, you're going to need to use a scalpel on your budget this year, right? Because you're going to need to look and see what's discretionary, what's not. Get with your management team, get with counsel, get with your accountant.
Yeah, this provision really opened up my eyes. I read that provision about the 115% and the ownership is on the owners. I've only seen it once in the 17 years, and it kind of fell apart because they couldn't gather enough information to put together a substitute budget. But this is a change, and it started us talking amongst the leaders here in accounting, like, well, our budget template has to change a little bit, and it has to have built-in proofs that if there is 15% or an overage over and above taking out insurance and reserves, what do we have to do? We have to present another one. And from what I read, it has to be presented prior to the budget approval meeting.
Correct. So it's a complete change. But the good news is the board's creating the substitute budget, not the members. Remember, in the past, it would be, we don't like your budget, we're going to petition to meet, we're going to substitute a budget. So the board's going to sit down. I wonder, Roxana, this would be interesting. Maybe we should check back in a year. How many boards are going to exceed the 115% with discretionary? It should be interesting.
It would be interesting. And I think exactly the same example you gave. I think about the lobby renovations, the aesthetic renovations, right? That could cost hundreds of thousands, millions of dollars, and they put it through an operating budget for many different reasons. One could be that they cannot approve a special assessment without the membership vote. So they put it through operating, or they try. So that's the
Right.
kind of
Oh,
thing
that's a good
we have to
point.
be kind of be mindful of now, because now the association has to, and thus the management company, that's what we would do for our client and present that substitute budget. It's very, very, it changes the table. It turns the table around to the association.
Well, what would be interesting is if the members approve the material alteration projects, but then they don't,
Mhm.
but then they don't want the board's budget. They approve the substitute budget without the funding for the material alterations they just approved. This could get confusing in some communities.
Yeah. Yes. Yes.
So it kind of
It's
speaks
already
to your,
confusing.
it is confusing, and it speaks to your timeline, Roxana, where, you know, it's June, July is really a really great time to start this process, because depending on where you are as an association, you may need every single day of that time to approve your budget on
And
timely for your residents.
absolutely. Something that we did a very hard push last year was not only to address reserves, but also other projects, right? The aesthetic projects, and to try to see that from a 3 to 5 year plan. So starting early, some things can get out of the way, like your 3 to 5 year plan. Let's see what that looks like and how is that going to impact the increases for the following year, and how do you have to pivot now for SERS or anything on the budget. So yeah, starting early, I can't say that enough. And even just from our history now is that we do start early every year, yet our budgets are pushing the envelope closer and closer into December. And we, just as a company, have always recommended before the holidays start, before the board members start leaving town and everybody, you know, starts thinking about the holidays, November 1st has always been our goal, to have our budgets approved before, and all eyes on the budgets. The owners understand, will be paying attention at least to the notification coming out that the budget is changing for the following year. So we always felt November 1st was a good timeline. However, on average, in the last 2 years, it's been closer to the end of November. And it's just because of, you know, reaching out to professionals like Donna. I'm sure you get a lot of calls from now to the end of the year, and especially with these changes, and reaching out to the engineers, which, you know, there's been so many articles about how we don't have enough. And that external engineers from other states are coming in and, you know, learning the statute to service the industry here.
Roxana, can I ask you, because I know we're all talking about SERS in terms of the reserve funding and the reserve schedules attached to the operating, but are you using the SERS as a launching off point for looking at other line items in the budget? For instance, I hate to sound self-serving, but legal, when it comes to you, if the SERS has revealed that there needs to be work done, are you factoring in contract review on all of those projects? Permitting,
Great
all of that
point.
other, yeah, you know what I mean? Are you using the SERS and the milestone as launching off points for a comprehensive evaluation of line items on the operating budget?
Great point to bring up, because one of the things that happened when the SERS was first introduced, and back in 2022, if I'm not mistaken, was, let's talk about what we need to do as a company for all of our associations. The first thing that we did, because the compliance didn't have to happen right away, you now have to line up your professionals, was we increased professional fees exactly because of what we were, you know, experiencing, getting those proposals. Now you needed a licensed engineer, a licensed architect. It's a different, you know, engagement. The charges did go up. We started getting averages, so that we started building up the budget on the professional fees, exactly because of what you just said, that you now really do need to rely. And as a company, we do recommend reliance on an attorney, reliance on your, you know, professional engineer or reserve study specialist. And great point about looking at what are your expenditures coming up, Is it going to require a contract review by your attorney? That means that your professional fees are no longer phenomenal 5,000. It is 25,000. I mean, that's what we were recommending back in 2022, about 25,000 to 30,000. And then now, depending on the size of the condominium, but now it has to stay at a certain level, to your point, because those contract reviews and navigating the statute.
And also, if the community is gonna be taking a line of credit, then you've got opinion of counsel, you've got the bank's lawyer's fees, I hate to say, you've got your own when it comes to issuing
Closing
that opinion
costs.
of counsel. So you do have to take into account, are we going to be using an alternate funding source for the SERS? That needs to probably be a line item on the operating. So it really is a comprehensive global view of the budget this year, more so than in years past.
In years past, yeah, 100%, the professionals you're gonna use are attorneys, your engineering or specialist, and your accounting professional,
Yeah.
because
100%.
we're always been there, we've always been there to understand the interpretation of law, but now we actually have a lot to do. And that's why, again, I can't say it enough, you have to start. If you haven't started, you have to start now, because first you need to understand your financial condition. Then you need to understand where you are with the SERS. That's the one thing I was talking to a coworker, and it said, the industry has changed, because I used to be able to see our condos in different layers. Oh, okay, our mature condos, our newer condos, the developer ones. Now they're in different categories because of the statute has some complied with SERS, some didn't, some waived non-SERS, some didn't, some partially funded non-SERS and then fully funded the SERS, and some did take on a special assessment just for funding reserves to make up what they had not done since the beginning of their association. So they're in so many different categories. I think 10 would be too little. I think there's just so many variances. They're so unique at this point. So yes.
When you're creating a budget, do you typically work with just the treasurer or the entire board or the president and the treasurer? I've always been curious on that point.
So that's interesting. It does vary. The more structured, what I think is more structured, is that they do have a charter for a finance committee, and that finance committee, which has a board member, obviously, typically the treasurer, part of that committee, not necessarily chair, but the committee member, and they have the ability to put together a budget. Obviously, we first put together the drafts, present it to them, and then we work with them workshops, and then they present it to the board, and then we have board workshops. But I would say it's 50-50. I think the other side is just working with the treasurer and president primarily. And then we present it to the full board at a budget workshops sometime around in September. We start presenting the drafts.
I think it would be good to poll our audience as well, because that's a great discussion point as to who actually prepares your budget, right? That first initial draft, or even the process itself, because it does range. So we are going to ask a question, and we look forward to the answers on who typically prepares your budget.
And now, Zuli, it's going to be double work, because you're going to prepare a budget and a substitute budget.
That's right.
We're trying to automate that, because when we saw that, we're like, wait a minute, we're gonna have to create another one. And imagine how many versions. What if they want to partially fund? Non-SERS.
Well, just so everybody understands, you have to fully fund the SERS, but you still have the typical options for the non-SERS of waiver or partial funding. Do you recommend finance committees? Because I know a lot of clients don't have a finance committee. I see pros and cons in committees, particularly when it comes to document rewrite committees. Those definitely have some.
I do. I see pros and cons. I see pros and cons with it. I think the detriment to finance committees is that they are not privy to all decision making at the board level, and they're not part of contract reviews. So like there is I think it gives a voice to the owners. For those that have strengths in finance, accounting, I think it gives them a chance to participate. That's a great thing. But they're limited in some of the things that they're privy to.
Right, and their expectations could be a little off. I will tell you that House Bill 913, Alex, had a provision previously that required a finance committee to be formed to allow the board to invest reserve funds. And, well, I should just say invest funds. And that went away, but the language that the board can use its best efforts to invest funds is still in the statutes. So it should be interesting. I'll be interested to know if KW, if you have a lot of communities that do decide to invest in something other than CDs, certificates of deposit, and just regular, savings accounts. I know I have clients that have invested in treasury bills and bonds.
Yeah.
How
Right.
about you?
Yeah, not bonds, treasuries, and it's not our recommendation. So we do formally recommend, we have a treasury department, so we do formally recommend FDIC products. What does that do? You limit it to the CDs, money markets, ICS accounts, so like insured cash sweep accounts, or CDARS, which is very similar. You basically put your money with one bank and then they manage that investment for you. But then treasuries, the argument has been, well, those are government-backed, instruments. Why would you not value those?
Feel comfortable.
And-
Why would you
right.
not feel comfortable doing that?
Right, and I say, well, we as a company have always made the decision that's FDIC insured and to be in a program that allows you to do that. But yeah, the language now that has come out is very interesting because they talk about investing funds with the commercial banks, etc., but they don't mention brokerages. So is
They
that
don't, and that's a kind of open question. Vanguard, the mutual funds. I mean, I do want to leave any treasurers listening, please don't try to just make the decision where to put the money yourself. This certainly requires a bigger conversation. I don't think any treasurer should feel personally comfortable making an investment decision alone without
That-
discussing with the entire board.
That's a great point, is coming up with an investment strategy policy. And that we've been doing much more of in the last, 3 years that the interest rates have really mattered. And that's been our recommendation because in it, you talk about what you should and you should not do. What is the number one goal of preserving funds over making money?
Right.
Who should be the point person for making those decisions, typically the treasurer. And it also points to the governing documents, because some do have very clear, language about
Right.
what you can and cannot do in that arena. So, yeah, an investment strategy policy is probably a great recommendation for anyone that is struggling with who has the ownership of that and safeguarding the funds.
It's a very good point. I want to emphasize what you just said. You also have to look at your governing documents because some of the older documents are very specific about the type of institutions where they want to see deposits.
Yeah, and some of them say state of Florida. Doesn't it say some of them like limit you to
Yeah.
state of Florida? If you read it literally, I guess, it says state of Florida. So
And the same holds true for the insurance provisions in some of the older documents. They've got requirements for insurance trustees, for specific type of ratings on insurance companies, some of which may no longer be available in the marketplace. So.
Yeah, and
Great point.
just because we're on governing documents and just starting early, one of the things that we recommend to start early is reading the governing documents, because don't believe that you have that much time to do a budget. I've read governing documents that say that 90 days prior to the end of their calendar year, they need to present the budget to their owners. Others say 60, others say 30, but don't assume that you have all the time up to the end of the year. Your governing documents do give you that guidance.
And please know your fiscal year.
Yes, that's a very great point. So
I'm
we
waiting
have a
for
very
some-
active chat, Alex. I don't know, our discussion is powerful and it's prompting a lot of great questions. So, and we've covered some of them already, but Alex, I don't know if you want to take it away with some of the questions that I keep monitoring the chat, and it's I'm excited for some of the questions.
Same here. So, Roxanne, a question came in from when preparing budgets for your clients associations, how many months of actual operating expenditures for 2025 will you use for 2026 final budget preps?
So we do two parts. We do a 5-month and then a 6-month because our templates allow us to quickly update those actuals. So we're presenting 2 years of actuals, 5 or 6 months, and then we update that with the projection. So we also provide a projection within the template. But don't be afraid to start early with the 5 months. You can project to what is going to happen for the rest of the year, and that, you know, the template should allow you to do that.
Okay, and if a treasurer finds discrepancies on the financials, do you or a committee fix them prior to August 1st? That was a question.
Yes, so if there is an adjustment, there is a section, at least in our budget template, that allows us to do the projections. In the projections, we can make those adjustments to classification. Let's just say contracts are going into repair and maintenance by mistake. We can make those adjustments right into the template so that in the future financial package, it would be addressed.
Great. Donna, question came in. Barry, does a temporary pause or reduction in surge funding apply after the recertification? Or since House Bill 913 only provides that, it applies after milestone inspection, which requires repairs to be made.
Did you say this was from Barry?
Yes, from Barry. Hey, Barry.
Hi, Barry. So the question is, does it apply? No, I believe that the ability to temporarily pause reserve funding, SERS funding, does apply if you are pursuing repairs dictated by the recertification. I think that's what Barry was asking.
Yes.
May I don't know if we've got time, but I'd love to have a minute to talk about holding the board's budget meeting electronically. Do we have a second to talk about that? 'Cause
Yes.
that's another huge change, okay? So the legislature really wanted to make sure that if boards conduct their meetings by Zoom, just like we're doing right now, that they also have a physical component for the board meeting for people to be able to attend in person who may not be adept with Zoom. And also that the recording, there must be a recording and it must be maintained as part of the official records. So I know in the past, we've had a lot of boards who have conducted Zoom meetings, but they have not recorded them. Okay, and they certainly have not kept them as part of the official records. That is a big change. I'm not talking about conducting the annual meeting in election. That's for another webinar. But I'm only talking about the board's budget meeting. It can be conducted by Zoom, but you have to have a physical location. You have to tape record that meeting, and you have to maintain it as part of the official records.
That's perfect.
That's a relatively big change. I still think that a lot of associations provide that in-person component, but some don't, to your point, and so they need to make sure that they incorporate that as part of their process. Important to take a note of that.
Yeah, Zuli, that was always my recommendation. When you're doing the important business of the association, and certainly adopting the budget is one of the most important things that the board does,
Absolutely.
or passing a special assessment at a board meeting, you do need to have that be as all-inclusive as possible. And that means offering a physical location for people who, you know, again, are not adept at using Zoom.
We absolutely agree.
While we pick
All right.
the poll results, I have one question for you, Roxanne, that came in. What is the rule of thumb for inflation this year for contracts, insurance, etc.?
We're taking 3%. 3% as the inflationary rate.
Okay.
You know, Roxana, that 25% catch-all that was increased from 10,000, it also, the statute now has finally built in
Yeah, I saw that.
an increase, an automatic.
That makes sense, right? I
Yeah.
don't know how long it's been 10,000 and no one's questioned that. I'm
It's
like,
been a long time. It
been a
covers a
long
lot of
time.
stuff.
yeah, and I saw that I guess every February they're going to address the inflation rate. So that's great.
Have you found, Roxana, that because of the last few years and the emergence of the structural integrity reserve requirements, that some associations that used to take large non-structural reserves, just now almost kind of like discretionary, that they've cut back on some of those that they're taking.
Some of the reserve?
Oh, yeah, reserve for items like, patio
Oh, I see.
furniture and things
Right.
like that. I mean, I have some clients that have 60 items in their non-SERS reserves. Some of those folks have decided to sort of cut back on some of those things, taking into account that now there are the mandatory SERS.
Yeah, but the non-SERS or the non-structural components, they've been built over time,
Yeah.
right? And so once you have it there, and then there's a discussion, do we really need this? They're like, oh yeah, but that's the lobby, it's the curtain, it's the, area. And I haven't really seen them come back. I think it's just more conversation about partially funding or not the non-SERS.
One of the other changes was that the board, now they basically confirmed what everybody was doing, which is the board does have the authority to move reserve funds from straight line into pooled.
Right, that was a clarification, right? That the board can make that decision of what
Right.
method to use. I think just last year we took a poll and it's, price very similar, about 98% are on pooled.
I mean, it makes sense. It
Yeah.
makes sense. It's more flexibility.
At the beginning when the SERS came out and they said that the developers, needed to have the SERS right away, basically, that we started receiving one of the first SERS with developer properties or condominiums, and they were on a straight line because of the way the statute read. I guess their attorneys interpreted it, and it did read, it read very much like a straight line method, and that's what they produced.
Alex, before the poll response, clarifying questions on the board budget meeting requirements. One was, how long do you need to keep the recordings, just for clarification? And does the statute also require a telephone link for the virtual meetings? So do they have to have the ability to dial in via phone if they can't do Zoom or in person?
That sounds like another Barry question. Yes,
No,
they do
it wasn't.
have, they do have to have a dial-in. I'd have to check, Zuli, on the, it's either, I don't know if it's just 1 year or it's the longer period of time. So
Gotcha.
we'll have to circle back on that. But yes, they do have to have a dial-in.
Okay, great.
Good to know.
Alex, do you want to cover the poll?
Yeah, let's get the poll up here, see what the results are.
I'm not good at that.
So here it is. Who typically prepares your budget? So it looks like it is 36% of board members, 88% of property management companies, 1% CPA, 0% attorney. So Donna, you don't prepare budgets?
We know to stay in our lane, Alex. We are not preparing budgets.
So that is interesting. That 36%, is that normal, Roxana? 36% of board members prepare the budgets? Does that seem normal? Not in our.
No, I mean, if you're professionally managed, your property manager, property management company should be producing the first draft for you, because we tap into what's happening in the industry too. And then the different departments, at least in our company, also participate. It's probably the only process that all of our company participates, like our recruiting team. They give us a labor analysis by different regions, helping us budget for next year for payroll, for example. And our chief engineer group gives us some pointers on preventative maintenance, some legislation that may have, passed recent, like the BDA. When that happened, they gave us some recommendations. So I would say that's not common, at least in the last 17 years. It has happened. And at the end, what happens is that they don't have the right formatting, and they ask us to put it into our template. And inevitably, the simple things like footing doesn't add up to what they thought was happening. So I'm just saying from recommendation, at least anyone on the line, one of our clients, if you're thinking at all of doing that, please let us do your budget because we have a lot of proofs in our template.
Yeah, I think that number is probably self-managed communities as opposed to professionally managed, but look, things have gotten so complicated. I know the division has a budgeting handbook, but it's extremely complicated to file. So I can't imagine anybody who has professional management and is not relying upon professional management to serve in that function, which is preparing the budget.
Very true.
Yep.
Yeah,
Yep.
that's where we inherit, self-managed properties. I think that has been, I mean, Zuli and Alex, you see it probably firsthand.
Fine.
Many are reaching out to professional management because it's very difficult now to navigate what's happening with reserves, insurance, labor.
Question
Absolutely.
here for Donna. It sounds like the 2-year pause in surge funding is only available when associations are faced with making surge repairs and not for non-surge repairs. Is that correct?
That is correct. It's actually milestone repairs. So it's the repairs and maintenance that are outlined in your milestone inspection or your certification. That's only really going to apply to Miami-Dade or Broward. But correct, it's not automatic. It doesn't mean just because you've got a milestone inspection in hand and said, here's our milestone inspection, now we can stop funding for 2 years. That's not how it works. You have to have a milestone. And it has to reveal that you have necessary maintenance or repair projects you have to undertake.
Okay, that's good to know.
Mm.
So, yes, Danny, there will be a recap. You'll be able to see the recording. That'll come. I know you got on late. He's asking here, so yes, there will be. Donna, somebody wants to confirm. They want to confirm, is it really just for associations over 150 units? Is what they want us to confirm. I don't know what the question was, but they're asking, you might have been discussing about, was it the recordings? You had mentioned something about 150 units?
No, I don't know
No?
what I don't know what that's about.
know.
150 units used to be a website. Okay,
Yeah.
that's now been reduced to 25 units. They have till 2026. I think that's what that person is asking, Alex.
Well,
Is about the
recordings.
only, the
They-
150 used to be to maintain a website. You have to upload your CERS, you have to upload your milestone. I recommend that associations get out of the document inspection business altogether and get everything scanned and digitized and uploaded. But I think that's what it is. In terms of the video, no, that's going to apply to anybody any board that's conducting board meetings electronically needs to tape it and keep it. Now, there are some nuances to this. If you decide to have an electronic meeting that's audio only, I really don't want to, it gets very complicated. Talk to counsel about that.
Okay, perfect. Jenny, you got that? I see that you put in for recordings, but yes. Okay. Roxana, talk about the Treasury Department. Some individuals are asking more about investing the reserves and the monies that they have extra in operating. And what exactly do you do with those monies? What do you, I mean, they mentioned, but people are asking questions of like, where are you putting most of the money here that's for the associations?
Many are taking advantage of CDARS or insured cash sweep programs. So the insured cash sweep programs, the basis of it is money markets. So basically with your bank, your primary bank, we recommend 6 just because they have a lot of association services and free services to our associations. They participate in this insured cash sweep program. You put your funds in that program. It can be over 250,000 because what they do is they go out to participating banks and open up accounts for 250,000, no more than 250,000. And they maintain that similar to an investment or brokerage where you will see a statement every month and it will list where your funds are. And the nice thing about it is that it flows between the insured cash sweep overnight into your checking. If you need the funds, we set a threshold. Anything over and above that threshold goes into the insured cash sweep. If you need the funds, it comes right back, seamless to you. You don't have to make decisions. It's part of the program. And CDARS, it's based on CDs, so there are maturities, just similar like a CD, but they go out on your behalf to participating banks, and they invest your funds in CDs in increments of no greater than 250,000. So that is programs that are many of our associations are taking advantage of. And part of the Treasury program, though, it's not just about looking at funds at one moment in time, because if it's reserves, we now need to project cash flow, liquidity needs, what are the upcoming year, 2-year needs of the association. So it is a full analysis of the financial condition and projecting to 2 to 3, 4 years out for the association.
Roxana, can I ask you, we've had a few clients that we've onboarded and they are earning well below market, in some cases, nothing, no interest on their accounts. I don't know if it's because they haven't looked at it or they haven't circled back. I had one client, one treasurer tell me, yeah, I know we could be earning more on our depository accounts. It's too much of a hassle to move it. At this point, listen, when the interest rates were so negligible, maybe that was one thing, but as they climb, what is your recommendation for associations that have had depository accounts sitting in the same place for years and they haven't increased the interest rate that the association's receiving?
We immediately, when we inherit some associations, that's one of the checkpoints. Treasury is part of that. And we immediately change that for the association because there are a lot of products, the insured cash sweep with the different partner banks, making over and above sometimes 3%. So that's a very good liquid program to be in, and we try to get them into those programs. And because we use a payment processor, so we don't use lock boxes through banks, we use ClickPay. Some of our maybe audience uses ClickPay in your association, but it's a very large payment processor. So what does that allow us to do is that we're no longer locked in to a bank's lockbox. So ClickPay is not a bank. They're just a lockbox processor, and we tell them where to deposit the funds. It could be Bank A as the same as Bank Z, so we have flexibility of moving those funds and addressing the collection issues of, well, if you move, how are we going to let our owners know? There's no real issue with that in our organization.
Yeah, and as people are struggling, looking at those things can help. They can help the bottom line for the association.
Absolutely. It makes a very big impact nowadays. Also consideration, because there's a large impact, non-exempt income, you have to also consider tax implication, but you're still making money. So it's all good. It's all going back to your association.
Yeah, I just had a board president text me here as you were speaking, Roxana. He's like, I want to thank Roxana. She's made us over 6 figures by moving with the analysis that you supplied.
Awesome. That's great feedback. We're running up against time, Alex.
Yeah, we got 2 minutes left here. So a quick question here that just came up, which it's interesting. Several of our contracted vendors have notified us of upcoming price increases due to tariffs, right? We got the tariff situation going on. Do you have any guidance of what average rate of increase has been among vendors? Are you seeing anything out there?
It depends. I mean, from what I've seen, it depends on the contract. The contract locks in, hopefully, a rate or increase or negotiated to zero. We have our procurement department that helps with that as well. But I haven't seen like a drastic increase. I mean, it's been the 3 to 5%.
I would just add, yes, everything's going to be key. Does the contract allow those vendors to pass along tariff costs? If it does, I will tell you their boilerplate contracts absolutely will protect them and allow them to charge those fees typically. So please get your contracts reviewed before you sign.
Absolutely.
Great. Roxana, Donna, any final thoughts before we leave today?
I mean, I would just say, attending webinars like this, knowledge really is power, and it should give you some comfort knowing that these changes, we hope, as you said at the outset, Roxana, incrementally, they're getting a little better. There's a little more recognition that more work needs to be done. The ultimate goal, I believe, was to give Florida the safest housing stock in the country. I think we're still on that path, but we have to take into account that these are occupied buildings. And people live in them, and it's not so easy, especially you've got people at all different stages of life living in these multifamily buildings. So getting as much knowledge and assistance from professional advisors is going to help. Don't try to go it alone.
Yeah, same here, Donna. 100% rely on your professionals. Have them on speed dial. Don't be afraid to pick up the call because it is difficult and it's getting a little more difficult as we navigate. And number one, what I've been saying throughout, start early, start right now. If you haven't, start right now. Looking towards 2026.
Great advice.
Thank you, everybody. On behalf of
you.
Roxana, Zuli, Donna, and myself, thank you for joining us today. Remember, we got our next webinar August 20th, and it's going to be Understanding Your Covenants. So everyone have a wonderful July. Stay dry, and see you next month.
Bye,
Thanks,
guys.
Donna.
Bye, everyone.
Thanks.
Thank you.
Bye-bye.
Bye-bye.
Bye.